Welcome to the Stage Analysis Members Midweek video. So it's Wednesday the 11th of May, just moving into Thursday here in the UK. Tonight I'm going to cover what's been going on in the major indexes. I've been posting some of the larger cap stocks today, some of the mega caps, and what's been going on with there's various ones that are in various states of early stage 4, with Apple attempting to break down into stage 4 as well. So I wanted to cover off a few of those. This is a good teaching area in terms of what's the various stages and how to identify them, etc. You can do some short-term market breadth as well as some of the longer-term market breadth. You might have noticed on the Twitter feed in the last couple of days and on the blog posts that I've posted the 20-year Nasdaq and NYSE percentage of stocks above their 200-day, 150-day, and 50-day moving average charts. So the Nasdaq particularly has hit some extremes. It's actually the 200-day has dropped below 10% today, I believe, and even the NYSE has got down into the lower zone finally. So starting to get some more extremes that are comparative to obviously only a few other times in the last 20 years. So we'll have a look at that. I also posted earlier and yesterday on the blog post the industry group bell curve from the IBD industry groups with regards to the bullish percent in each of those in the 200 groups. So I wanted to cover off that, as that's also reached an extreme level with it moving over to with the vast majority of groups over in the stage 4 zone. So I wanted to look at that in a little bit more detail, as it's one of the more interesting breadth charts that I do. And it's different to the 104 industry groups one that I do, as this one's using the bullish percent index, but they give very similar type of data, but this covers more subgroups. So I think it's a quicker one to do. So it's useful for these midweek videos, I think. Another thing I wanted to cover off today is what's a few of this week's earnings. So the watch lists that I did at the weekend in terms of the earnings watch list, what was going to be reporting this week and which ones I was keeping an eye on. There's a few from there which have had some extreme moves to the downside. So we've got another one that came out tonight again with Bros with another big gap down move in the after hours. So that one's set to open down huge in the morning and actually down all the way down at the IPO pricing level. So really destroyed, and we've seen quite a few do the same. So also wanted to look at what's been going on in the cryptos. I also posted today about the fact that there's been a lot of heavy volume selling and massive moves in the last few days, and obviously over the last few months, vast majority of them have been hit really hard. There's less than 5% above their short, medium, and long term moving averages, which is why I haven't been posting those charts for a while, because it literally hasn't moved. They've been so oversold for so many weeks now. There's quite a lot that are down much more than 50%. Some, quite a few, down over 80%. And today we saw massive drops. I think Luna had a liquidation move where it's literally going to zero, and it followed suit in quite a lot of the other altcoins. So I wanted to cover that off a little bit at near the end of the video, as well as a look at gold and silver as well, and see what's happening there. As I posted yesterday about what had been going on in gold, with the potential move back into stage 3 again, with the up thrust after distribution type setup that it's had over the last month or so. So cover that off in a bit. So let's get into the start of the video now. So starting off with the S&P 500 as normal. As I've said in the previous videos, we've dropped off. We were testing the stage 4 breakdown level, and on Monday we dropped off into stage 4 more definitively after breaking this early shakeout move from the February low, and convincingly moving down, with all the major indexes doing the same. We followed through in the last few days, now making lower lows. You can see the percentage of stocks above the 20-day moving average is down at only 8.8% in the S&P 500. So we're extremely oversold in the short term, but we are just in a short-term downtrend. It's tried to bounce, and you can see from the strength of the bounces in the last few days that they've been very weak, and we've made lower highs in both cases and just continued on and closed at the lows. So it could quite easily get more oversold, and with the selling picking up speed. So definitely starting to get a bit more dangerous at this point. I talked about in the weekend videos about the dangerous position that we're in terms of with the various market breadth indicators, but the stocks are starting to show that now in more color, basically, with, again, Nasdaq composite here dropping further today. We've got dropped off another 3% today, and since the weekend, since Friday there, we're already down this week over 6%. So it's continuing to move lower in stage 4. If we show you the weekly chart here, you can see the big weekly bar we've got now, and then the stage 4 decline seems to be picking up steam. IWM, same picture, been in stage 4 for a little while now. So we go to the weekly chart on this, you can see, as I've shown you before, the base structure, stage 3 with the up thrust after distribution and test, and then last point of supply, another last point of supply, and it's broken down convincingly. So we moved into stage 4 back in January time here, and this week there, but continued, then made an initial redistribution base and has fallen off the cliff now, and convincingly moving off to the lows. So whether we retrace the entire stage 2 advance, so the original stage 2 advance back from around this area here, so you had your original breakout which did dip back into the range, then a more convincing move into stage 2, and so we could potentially retrace all of that and get back down to around this 150 level and more even. So keeping an eye on what's going on there, but you can see on the short term we are potentially oversold, as we're down at the -3 ATR level. But we can, as you know, we can continue to run at the -3 ATR level for a while when we're in that kind of state. So we'll see how that develops in the coming days. I wanted to show the IBD 50, as this is another good example of the 4 stages and how they're developing. And this, like ARK and like many of the other tech growth related kind of areas of the market, have just been destroyed, especially since November when we had the double top and then significant reversal bars up here. So these significant reversal bars, which then broke down, and then we started to move off into stage 4 more convincingly. So there was an early breakdown within the range. So anywhere throughout this area here, you see the distribution pattern as it formed, and then the redistribution, and then the stage 4 continuation. So we've retraced the entire stage 2 advance in quite a lot of these CAN-SLIM stocks now. So that's why, obviously, the growth area of the market has been particularly bad. Look at the VIX today. There was a little bit of a divergence with what was going on in the price action. It didn't follow suit to make new highs there, while the price made new lows. So showing a little bit of relative strength, but nothing to write home about, as it's still well above this 200-day moving average, which is obviously the area we want to get back below in order to be in a more favourable environment on the long side. So at the moment, volatility remains high. So it's short sellers market at the moment. Next up, I wanted to look at some of the large cap stocks. I talked about, or I highlighted a lot of these today in the Twitter feeds, as Apple started to make the stage 4 breakdown attempt today. You can see it's down 6.85% on the week to date chart here. If I zoom in on this on the daily, you can see the breakdown attempt today. So it's broken multiple levels in here and closed convincingly near the lows of the day. So you see we're below the 21-day is about to cross over the 200-day, and the 50-day is still above it. So still got some relative strength in terms of it's quite a short base structure compared to what we've seen in quite a lot of other stocks, but it is one of the last to attempt to break down into stage 4 of the generals of the market. So And with this attempting to break down, this could be obviously a precursor to a much deeper move in the market if this does manage to break down into stage 4 here. If it can hold and we get a rebound, then we start to see a little bit of spring type action that can get back above that 30-week moving average and start to move back up to the upside again. Obviously, that would be a huge positive for the market. But if we start to see this, if it does a weak rebound and then continues to falter, rolls over, then can't get back into the range again, continues off to the downside, then obviously that would be fairly catastrophic for the market in general, as obviously such a big, large cap liquid leader. Microsoft also breaking down into early stage 4 as well. Again, short base structure in terms of the actual stage 3. I've talked about this before with a stage 3 base in that you don't really know whether it's in stage 3 or not until you get this change of behavior. So although the broader base structure you can mark out from here, so you can see we've got a whole head and shoulders type pattern with this broader structure until this point here, until you've had this change of behavior move here that's much deeper than these previous other swings. You don't know that you're moving into stage 3 or not. You only know that it's just a normal pullback. So at this point in here, this is when you start to realize with the change of behavior that you're starting to move into stage 3. So obviously at this, if you're still over here and looking at the chart, you're still in stage 2B at this point, and you haven't yet had that change of behavior because the length of this decline is not any different to any of the previous lengths. So, but once you start to bypass that and you get this bigger move, you then know that you're starting to move into stage 3, and then you're obviously monitoring the price action to look for potential signs of weakness for that stage 4 breakdown potentially. But stage 3 doesn't always have to turn into stage 4, but obviously a lot of the time it does. So Microsoft now into early stage 4 more convincingly as well. Nvidia been in stage 4 for 4 weeks now, so this was your stage 4 breakdown week here. As it attempted to spring, but just it couldn't and roll back over again. So it's now convincingly down into stage 4 here. You can see we've already dropped 21% or so from the stage 4 breakdown level there, and it's off a long way from the highs up here. So already off 52% from the highs back in, when was that, November time. So a big decline, but it is coming into an area of support now. So the previous base in here is going to potentially provide support for Nvidia. So this would be an area to look for a potential bounce. But in the market, when the major market is in a stage 4 decline, then correlations tend to go to 1. So support and resistance levels can be a lot more sketchy and not hold quite the same significance when the market is strong. So be aware of that. Google also broke down into stage 4 weeks ago, showing a little bit more relative strength in the near term versus the S&P 500. You can see this little uptick that it's had over the last 2 or 3 weeks. But again, convincing stage 4 breakdown now, with it's down almost 10% since the stage 4 breakdown, and off the high it's come off 25%. So for Google, that's quite a big move there. You can see it had obviously an exceptionally strong stage 2 move for the last 2 years, and through 2021, when most stocks were going sideways, Google was continuing to outperform the S&P 500. You can see that exceptional relative strength that it had, then started to falter here. So this is another way you can help to identify stage 3 when using the stage analysis method, is the relative strength line versus the 0 line here. So this is the 0 line is the 52-week moving average versus the S&P 500. So this is the blue line here. Once the relative strength starts to falter, you start to see it pull back towards the 0 line, and then start to grind and potentially move above and below it itself, like the price action is doing. That's when you tend to know that you're in a stage 3 base or stage 3 range compared to a normal stage 2. As you can see here, when you're in stage 2 and you're just making normal pullbacks here, you did get a little dip there, but then on the next here, you're way above the moving average. the zero line here compared to that. So in here, still well above. So at this point you're still in stage 2, you're in late stage 2, but then once you start to move back into the zero line again, it starts to get much closer into it. It's much more likely that you're then in a stage 3 environment. So whether you identify it correctly or not is not overly important. It's just that you're looking for clues to try and see. And one of the major clues, like I was talking about with Microsoft, is this change of behavior. Once you see the change of behavior, and then obviously short sharp rallies like this, and again whacking in and out, volatility increasing, this kind of behavior is not what you see in stage 2. So at that point, you've moved into stage 3, whereas in stage 2, you get these more orderly pullbacks. They tend to hold around the 50-day moving average with only short, or 10-week moving average on the weekly chart with only short dips below it, and then start to recover back above. Whereas in stage 3, you tend to get moves below the 30-week moving average and move above and below it with increased volatility. So, and obviously more heavy volume starts to come in early in the range as well. So that's something to look out for there. Amazon, another one in stage 4 now, which it's been in stage 4 since the start of the year. It was one of the first of the large caps to break down. See back in the 18th of January week here. So I highlighted it at the time, and it moved down only for 2 weeks initially before forming this flag type pattern here. So bear flag, and then convincingly broke down again back in April time, and has dropped off a cliff basically since earnings. It had a big gap down move on the daily time frame and has continued to make lower lows, and again wiping out that entire stage 2 advance. So it's the original stage 2 breakout levels. It's now below that move from the COVID low, and then move back out into stage 2 again. So potentially could be moving to an area of support, but again, with declines like this, you don't want to catch a falling knife. And in the method, phase A of a base structure is nowhere near an entry point in the stage analysis method and in the Wyckoff method. So obviously using the combination of both of those, phase A, when you get a selling climax and you potentially see that selling climax in an automatic rally. So say for example we did manage to rally here. So I'll just mark this bright. So say we managed to have a spring type move here. We got an automatic reaction back up towards the moving averages. Then that would be a sign of the start of a potential base structure. Then obviously a secondary test, and at that point, once you come out of the secondary test, this is your phase A type behavior. If you get that kind of move and it starts to move and you start to form a range at that point, then potentially then you're into an early base structure. But still, this is nowhere near an entry point. Phase A is not an entry zone in the Wyckoff method or in the stage analysis method. We wait until we're looking for a move in phase C or phase D or in phase E. So you could have potential up thrust and then come down. We'd be looking for phase C into phase D. So at this point in here, this is a potential entry point in the Wyckoff method. This is the earliest entry points. And then you might have moves up in here. So then potentially this is stage analysis type entry points. This is another Wyckoff and stage analysis entry point. And then obviously got continuation, breakout type moves again, stage analysis entry points. So it's that kind of area where, so all through this, as you come back into the range, as you break out through here on pullbacks in these kind of areas. So all through this kind of zone is where we're interested in terms of getting long once more. We're not interested in getting long and trying to catch these initial rebounds in here, as this could just continue to do this and just continue going down. You don't know when it's going to end. So we wait for the base structure to form. We wait for the initial phases to develop, phase A and phase B to develop, in order to build a cause, to develop the range and define the range before we start to get interested. And that's when I start to put them into the watch list. I start to once a stock makes the initial selling climax and automatic rallies, when I start to highlight it in the watch list and then start tracking the stocks as the base developed, so that we're then ready to get them once they move into those later phases. But as I said, at the moment, this one is a long way from getting anywhere near that. So stage 4 decline, and so not on the radar for a long time yet. Adobe, another one, is a really good example of the 4 stages, continues in stage 4 decline at the moment. We had the stage 4 breakdown. This was one of the earliest large caps to break down. So it broke down back in early January. So similar to Amazon a couple of weeks before, and has moved off convincingly. So since the highs, this is down now 45% there, and since the stage 4 breakdown area here, this has moved off about 30%. So big decline for Amazon, for Adobe. This is a bit of a cash cow if you look at a monthly chart on this. So this has been in a monthly stage 2 advance since 2013. So it had a tremendous stage 2 monthly run. So it was up almost 1,800% from the monthly stage 2 breakout, and that lasted for 7-8 years there. But we've now had a change of behavior. So this is what I was talking about on the weekly chart. You can see that during the monthly stage 2 advance, we had orderly pullbacks towards the 30-month moving average there, and mostly towards the 10-month moving average. But at this point now, we can see we've had a change of behavior. This is the biggest pullback and the longest pullback that we've had throughout any of these pullbacks here. So most of these only lasted for 3 or 4 months, whereas now we're 6 months into a pullback here. So this is a change of behavior, and so we're potentially into a monthly stage 3 at this point now. So when you have this change of behavior, obviously at some point soon, we're potentially going to have an automatic rally. So this is our buying climax into automatic reaction, and not automatic rally. We'll look for a secondary test is what I mean. So we'll be looking for this to form a base and then potentially move back up into the monthly stage 3 range. So expectation after this finds a bottom in stage 4 on the weekly time frame and starts to base out in stage 1 would be for a move back up into here to test. It could, like we've seen with the weekly charts, though, you don't necessarily, with such a big pullback like this, you're not necessarily going to get all the way back up towards the highs with your test. Your reaction might only come back up and start to form a lower base structure, and you might start to go sideways and form a base structure like this before a bigger decline, or potentially you can go sideways and then eventually move up and out again. So, but at the moment, this one, after such a great move for the last 7 or 8 years or so, has moved into a monthly stage 3 now, but obviously deep into a stage 4 decline on the weekly chart now, with how many weeks we into it now? 18 weeks in now. So coming up, what we got there, four coming into its 5th month now. So still in stage 4. So stage 4A is during the first swing. So I was talking to someone about this today. Someone asked me if something was in stage, I think Nvidia was in stage 4B, but it's only 4 weeks into its stage 4 decline. So it's in what we call stage 4A. So stage 4A is the first wave, for example. So if you use Elliott wave analysis, is a good example of this. So got wave 1, wave 2, we're into wave 3 at the moment in this. So stage 4B would be when we get to wave 5 is a good way of judging it. So say we had a move like so, and then move down. So at this point here, you would be in stage 4B if it did something like that. Obviously, if it reacted here and then started to base, then it potentially never get to stage 4B. And another way that you can identify stage 4B is as a rough guide, is if something's been in stage 4 for more than 6 months. I would say that's a good guide. If something's been in stage 4, or it's been in stage 2 for 6 months or more, then it's late in that stage, because stage analysis, the time frame on the weekly charts, is generally for the investor method of only up to about a year, so 6 months to a year, whereas the trader method is much shorter. It's more 1 to 4 months or so in generally. So Tesla also one of the stronger ones of the major charts in stage 3. Still, like you can see the base structure here, so it hasn't yet broken down into stage 4, but you can see the 30-week moving average is starting to flatten out. See this structure that's been forming, so it's getting near the bottom of the range now. It's still in a big zone of prior support, so it could, even if it does break down, there's still areas of support below, but that's quite a big percentage move. If it does get down there, it's still another 30% that could come off there. So Tesla, one of the last generals, surviving and not in stage 4.